Hello, Warren. Yeah, I can't talk right now. You know, aren't you supposed to be playing bridge? So you want to tell me a joke? Okay, well, you better make it fast because I got the audience waiting. What's the difference between day traders and government bonds? I don't know. Tell me. Government bonds pay income and eventually mature. Oh, that's a good one, Warren. Listen, I got to go. Lay off the Dairy Queen. We'll catch up later. Pardon the interruption. Shame on me, everybody. I'm Ron DeLegge with ETF Battles. Thanks for joining us. Now that you've eavesdropped on my privacy and my personal calls, I'd like to introduce today's ETF Battles, which is quite epic. It's a showdown between two of the largest ETFs on the planet by assets and by trading volume. We've got the Spider S&P 500 ETF, that's ticker symbol SPY, versus the Invesco NASDAQ 100 ETF, ticker symbol QQQ. Full disclosure, this is a rematch because we did this particular battle earlier in the year, and that was prejudged. That was just me. So we're going to have on today's program the aggregated knowledge of our judges. We're going to go through this rematch. And for those of you new to the program, I want to say we're glad to have you with us. And be sure to follow us and also hit our comment section. Let us know what you think about the program. For regular viewers, you know I love you, and we appreciate your continued support, your comments, sharing the fact that ETF Battles exists, telling others. That's such a huge help. Helping us to judge today's showdown is David Kreinces with ETF Portfolio Management and Mike Akins with ETF Action. Guys, great to see you again.
Great to see you, Ron. Good to be here.
Hey, Ron, thanks.
So we're going to go through these four battle categories one at a time. We've got cost, diversification, performance, and then we've got our infamous mystery battle category where you, the judges, get to pick that one factor or several factors that you think are crucial to today's analysis. And we're going to give each of you 30 seconds in each of these categories. You're going to pick QQQ or SPY. You can also opt for a split decision. And then at the end of the show, we're going to declare an overall final battle winner. So which of these two giants wins today's ETF Battles? We're going to begin with Mike. Mike, you've got 30 seconds. We're going to start with the cost category. Go.
Both of these ETFs are fantastic examples of why ETFs are so popular. They're ultra liquid and they're ridiculously cheap and provide broad diversified exposure to the market. Absolute. SPY is going to come in a little bit cheaper than the Qs, so I'll give it to SPY, but I think these are two great examples of why ETFs are so popular to begin with.
Amen to that. And that's a great start. Dave, how do you see it?
Thanks, Ron. You know, this is a classic matchup of old school generals. It's like Bird versus Magic. As for cost, the S&P 500 ETF SPY launched back in 1993 as America's first ETF. And today, with $270 billion in assets, SPY is the granddaddy of ETFs. And this granddaddy ETF has an expense ratio of almost 0.1%, while the NASDAQ 100 charges 0.2%. Now, at first glance, you would say QQQ is twice the cost of SPY, but with the Qs, you get double the tech exposure, and more tech is better. So I give the win on cost to the NASDAQ 100 QQQ.
Oh my gosh, you're surprising me.
Let it begin.
But that's good. That's good. We need to move on now to the next battle category. You're still up, Dave, and this is going to be diversification. Who wins the battle between QQQ and SPY?
So for diversification, these two broadly diversified U.S. equity ETFs are both legendary core holdings. And investors should know that Warren Buffett does recommend 90% in the S&P 500, which is more diversified. However,
so you were listening to my call. You were eavesdropping.
Oh, was that the same Warren? The granddaddy S&P 500 ETF looks old-fashioned because it hasn't added Tesla yet. Tesla's market cap is now almost $400 billion, and the stock returned 103 times your money this past decade. Since the NASDAQ 100 includes Tesla, and given the critical importance of leading growth trends in machine learning and robotics, we strongly favor extra tech and give the win-on strategy to the NASDAQ 100.
Okay, let's move on to you, Mike. How do you see it in terms of diversification between QQQ and SPY?
So, first of all, my big disclosure here right off the gate is I think the Qs is loaded with good companies. I think the fact that it has loaded up on Apple and Microsoft and Google and Facebook, and oh, by the way, that's over 50% of the portfolio right there, is one of the reasons it's done so well. But if you're just talking about a baseline for your portfolio and writing out full market cycles, SPY every day of the week and twice on Sunday. And that is going to give you exposure to the broad economy as a whole, not just one narrow subset of the market. How many of your viewers out there know that the NASDAQ 100 intentionally leaves out financials? One of the largest parts of our economy is intentionally excluded from the Qs. Did you know that Visa, MasterCard, Walmart, McDonald's, Procter & Gamble are all not in the Qs simply because, oh, that's right, the Qs only hold stuff that are on the NASDAQ. So I'm not going to doubt for a second that the Qs are chock full of wonderful companies. But if we're going to talk about exposure and strategy as a baseline for your portfolio, the S&P 500 is going to give you a better example of our economy today than the Qs. That does not mean it's a better investment today, but a simple strategy standpoint of what you're trying to own as a core position in your portfolio, the S&P 500 is has a better method, even with the old school committee approach, than the Qs do of just owning the largest 100 companies on the NASDAQ and excluding companies that just chose to list the New York Stock Exchange, because that is how the Qs were built. They were built as a product for NASDAQ, and the byproduct has been a bunch of wonderful companies, and the performance has been great. But from a strategy perspective, that is what you're buying.
Thank you for that clarification and analysis. Let's move on to the next battle category, which is performance. So QQQ versus SPY. Mike, you're still up. Who wins?
Yeah, hands down, the Qs have been unbeatable over the last decade. Top performing actual equity ETF, long only equity ETF of the last 10 years, last 5 years. They're top 5 over the last 3 years, top 10 over the last 1 year. The companies they own and the weighting methodology they employ has been on fire, and that has worked out very well, but it's been on fire randomly. So I think, from that perspective, just know that there's probably better ways, in my opinion, to build a diversified portfolio by starting with a broad-based S&P 500 and allocating. If you want more tech, there's some great tech funds that can get you just tech, or if you want more communication services, or if you want robotics, or if you want, there's a lot of ways to build a portfolio articulately using those strategies. So performance Qs hands down over the recent period, but remember the tech bubble when the Qs were around during then were down, I believe it was peak to trial 72%. So these things can turn.
And you also had a decade too, right? From 2000 to 2010 when it didn't do anything.
Correct.
Very good. Okay. So you weighed in. Thank you for not using any asterisks, by the way. That's one of your favorite things to do. I think that's one of your side hobbies. Aside from watching
asterisks.
Asterisks. Aside from watching the Kansas City Chiefs win all the time.
Chiefs.
So, Dave, let's shift to you in terms of performance. How do you see it between QQQ and SPY?
Well, over the past decade through September 25th, the NASDAQ 100 returned double the S&P, delivering 5 times your money versus 2.5 times. While both of these returns are impressive, it's time for wildcards because the leveraged versions performed much better. The 3 times S&P returned 12 times your money. The 3 times NASDAQ 100, symbol TQQQ, produced a sensational 54 times your money. This means TQQQ delivered 21 times the S&P return. So given this legendary performance, we call TQQQ the Michael Jordan of ETFs and the American Dream ETF. But for this battle, the win on performance goes to the unleveraged NASDAQ 100. However, all of these securities can be extremely volatile, so be very cautious and careful when investing.
Thank you for that warning. We appreciate that. And let's move to the mystery battle category. You're still up, Dave. This is where you get to pick your factor or single or several factors that you feel are important to this battle. So what is your mystery category and who is the winner?
You know what's a great mystery category, Ron? Position weighting. Big surprise. At ETF PM, our unleveraged aggressive growth strategies can be up to 100% in either of these leading US equity ETFs when appropriate. So for position weighting, I'll call it a split decision.
Okay, let's shift to you, Mike. How do you see it in terms of the mystery battle category? What is it and who wins it?
So my mystery category is going to take you on a journey of this company that we've never heard of before. It's going to IPO next year, and it's going to be the next Tesla, or it's going to be the next Visa, or the next MasterCard, or the next, you name it, the next fabulous return of 1,000% over the next 10 years, 10,000%. But when they go and they decide to list and go public, they go to the New York Stock Exchange. And as a result, you do not get it in the triple Qs. And so my mystery category is a little thing I like to call randomness. And the randomness of returns is alive and well with this strategy. Doesn't mean it's not a great investment. And it's not chock full of great companies and great opportunities right now. But keep that in mind as you're building out a diversified portfolio, that these things can change quickly. And, you know, today's winners can be tomorrow's losers. So I made my winner to SPY because despite it not being my favorite way to build a product, being the S&P 500 committee that picks the companies and weights it, it is a far better example of the economy as a whole than the Qs are. And the strategy will continue to show that in the years to come.
Very good. Thank you for using that story, that analogy to help us understand your point. And this is your final opportunity, judges, to weigh in on your overall battle winner. Mike, you're still up. We're going to stick with you. Who is your overall winner between Qqq and SPY?
I think SPY is the foundation of the portfolio. And then tactically, you can add to it with satellite positions and own the future of your portfolio, understanding what it's going to be in it. So I'm going to give it to SPY for all the reasons I walked through at the beginning and hand it over to Dave.
Dave, your final opportunity to weigh in. Do you agree with Mike's assessment of his overall battle winner? He chose SPY. How do you see it between these two ETFs?
Thanks. Well, before I recap, I'd like to say that core ETF exposure is a critical decision for investors. And in my opinion, we should review this core matchup at least quarterly. So to all the investors out there, please tell Ron in the comments section if you would like to see this matchup updated quarterly, because I know I would. But to recap this battle, at ETF PM, we believe artificial intelligence is the most powerful market trend, which means technology exposure is more important than ever. We also believe that leveraged ETFs are the future of investing. So read all about it in our new book, Investable Benchmarks, and I give the win on this battle to Qqq.
To Qqq as the battle winner. And thank you very much, Dave, for weighing in. And you guys, in terms of the My Battle scorecard, you only agreed on performance. Everything else from cost.
But that's the most important thing, right? We're trying to grow the portfolio here.
That's right. So really, that obviously is the bottom line, performance, right? But there's a lot of other key criteria that we need to examine, and we did. And I think you guys did an excellent job of arguing and making your points. Overall battle winner was a split decision. And My Battle scorecard, I've got to score this as a split decision.
Can we contest?
Of course you could contest. Go ahead. Contest right now. Go ahead.
You know, I just want to push back because I kind of feel like at some point you're getting paid for the differences, right? So if the Qs beat the SPYs by 3 times, is that enough, or 4 times? But there's got to be some point where you're paid for those differences. And my view is that I agree with Mike. You're more diversified in the SPY, but I think when you look at the trends in tech, you really need that long term.
That's a first for this program, a contested battle outcome by the judges themselves. Mike, what do you have to say about this?
I think that it's, since we used the football reference earlier, I think we're playing a little bit of Monday morning quarterback when we talk about performance as being the winner for a 10-year period or a 5-year period or even a 3-year period. And I think that at the end of the day, I think of ETFs as portfolio construction tools. And I would prefer to go about it starting with a broad ownership of the economy. And then I don't disagree. I think tech is a better investment right now. I think comm services is a great investment right now. And, if you look at ETF Action's AIM portfolios, we're overweight both of those sectors with specific tools to do that, which I believe is just broadly. I compare ETFs based on their categories, and classification wise, we have Qqq and Spy both as size and style core US investment vehicles. And from that perspective, as a core use, I think Spy makes more sense. And if I want that added exposure, I will go into my sector and industry or my thematic ETFs and be a little bit more like a surgeon and tactically get that allocation versus letting who decides to list on the NASDAQ make that decision for me.
Very good. Well, judges, thank you for weighing in. This has been an epic episode. We really appreciate you guys giving us your analysis. I want to get the audience in on this. This was a contested battle outcome. What are your thoughts about that? Do you think that this should be contested? Also, give us your feedback on whether you think this should be a quarterly rematch. This is the first time, like I said, that we're doing a rematch on Qqq and Spy. So let us know what you think. Hit us up in your comment section and let us know your thoughts. Also, if you'd like to see a specific ETF battle, a matchup that you have been wanting to see between two ETF ticker symbols, give us those ticker symbols and hashtag ETF Battles. You can do that on our Twitter feed at ETFguide or in the comment section below. I'm Ron DeLegge with ETFguide TV, and until next time, watch the battle before you invest.